The views and opinions expressed in this broadcast do not necessarily reflect or represent the views and opinions of WBGR Network.
It's your life. It's your life. It's your life. Your money with Breanna Colón. It's your life. It's your life. It's your life. Your money with Breanna Colón.
Well, what's up, everybody? Hello, and welcome to the show, Your Life, Your Money with Breanna Colón. I am excited to be here with you today again for another great show. Tell a neighbor, tell a friend. Girl, Breanna's show is on, and it is a hot and necessary topic that we're talking about today, which is life insurance. How much do you really know? Okay, so whether you're young or old, whether you have a policy or don't have a policy, whether you're a high income earner or a low income earner, there's going to be something for you to learn today, okay? It's a really, really important topic. So I do invite you, as we get started on the conversation today, to join us on the Facebook chat, or if you'd like to call in today on today's topic, the number here is 301-429-9247, or you can reach us on 306-7284. As owner of Integrity Financial Solutions Incorporated, one of our services that we offer is life insurance. And of course, education is the key. The more that you educate yourself on these financial topics, then of course, the better financial decisions you could make for yourself and for your family. And so joining me today is one of our life insurance agents, Mr. Tyrone Smith. What's up, Tyrone?
Hey, how are you? How's everybody? Great to be on the show, Breanna. Thank you for having me.
Yep, absolutely. Glad to have you. Thanks for hanging out with me today.
Absolutely.
So we're just going to jump right in and just start with the question of, do you need life insurance? And how do you know if you need it? And like I said, as we begin the conversation, certainly if you want to get in on the Facebook chat, it's going to be great conversation today. And again, that phone number to call in is 301-429-9247 or 301-306-7284. So Tyrone, what you think? What do you need life insurance? What you think?
I think the bigger question is why don't people have life insurance?
Right?
It's not a question of whether or not you need it. It's an obvious question that you absolutely need it, because there's really only two types of people in the world. There are people who have substantial amounts of wealth where they can cover themselves.
Right.
Or you have people who do not have a substantial amount of wealth, and they've got to figure out a way, how do they cover their family and their colleagues or whatever, their business or whatever. How is that going to happen?
Right.
So it's not a question of, how much do you need? The question is, do you need it? You definitely need it. There's not a question. And
Exactly.
how much really just determines based upon your assets and things that you have.
Yep. I mean, really, at the end of the day, the bottom line is, would you be a financial burden to your family if you were to pass away tomorrow?
And most people are
going to be a financial burden. Right. That's the bottom line. I wrote down some questions that people really need to legitimately think about. Would they have to borrow money from loans or family members or friends just to pay for the funeral? Would you leave kids behind that suddenly become someone else's financial challenge? Or would your spouse have to sell the house just to stay afloat financially? Would your family be able to maintain the lifestyle that you created together? Or would your family business ultimately die because you didn't leave enough money behind for the company to recover financially from losing you? If your answer is yes to any of these questions, then you need keyword, need life insurance.
And how about this? Those questions that you're asking, in most cases, those are questions that many people don't ask.
Right.
They don't ask those questions because in their life, they don't see that as a daunting task of, okay, in case my spouse dies, is the house covered? Well, that's really not a question because in their mind, they're thinking, well, if my spouse died, the first thing I'm thinking about is, well, what am I going to do as a person?
Right.
They're thinking more person, not asset. They're not thinking about all of the bills. They're not thinking that the creditor will be empathetic that you have lost your mate. But the creditor is still going to send you the bill.
Right. Right.
Ladies and gentlemen, regardless of whatever you may think, they're going to still send you the bill. I am so sorry to have to tell you that. They're going to send you the bill. They're going to send you the bill. And they're going to send you the bill without a sympathy card. It's just going to be the bill. And you're going to have to pay it.
Exactly. So let's talk about reasons why people tend not to get life insurance. First of all, back to your point of, life stuff. We tend to be a microwave society, where people want everything now. We're thinking about the now. We're not thinking about the later often enough. Sometimes people can only see, right here of what's in front of them. So the idea of thinking outside of that is, I'll get to that later. I'll get to it when I want to. So one of the main reasons that people don't get life insurance right away, of course, is procrastination. Other times is because they think they have time. And to that point, I don't think we knew when we were going to get here. We didn't know when we were going to be born. Did you know?
So
did you know?
No, I was checking my watch and I was in line. I was in line.
Right.
And God in my next. My next. So that way I know exactly what to.
Right.
But to that statement of people saying that they have time, my answer to that is, how do you say you have time like you own time? How do you do that?
Well,
how do you do that? You don't own time, so how do you have it?
Right.
And even if you had it, the way we use it is so poorly. So even if we did have it, I still believe people would miss their own appointed destination of end because of the way that we manage our time.
Right.
So that whole I have time, no, you don't have it. You don't own it.
Right.
So I would suggest that our listeners change the framework of their thinking. You don't have time.
Right.
You are borrowing time from the owner. If you don't know who the owner is, that's a whole nother conversation. But you're borrowing that time. And how you borrow really determines how you lend.
Right. Very, very true. And quite often you hear it from younger people, of course. The younger generation tends to not place as much value on life insurance because they feel like, oh, I'm young. I had that happen with a young lady who actually was a single parent with 2 kids, and, talking to her, well, I feel I'm 28, I have time. Who told you that? What?
That
really?
I've got
Are you sure
time.
about that?
I have time. That is such
You got a contract?
That is such a statement. I have time.
Right.
Really?
Right.
Where'd you get it?
Right.
Where'd you get it? How much did it cost you?
Right.
Or how much is it? Is it like a payment plan? How much are you paying towards having it? And is it renewable?
Right. So if we didn't know when we were going to get here, then of course we certainly don't know when we're going to die. Absolutely. So the better that we can prepare ourselves financially, then of course the better off we're going to be. Now, another reason that people tend to put it off is because they think that they won't qualify. But sometimes that's because maybe they didn't go to the right company,
Or you heard it from a friend.
Right. What happened to your friend does not necessarily apply to you. So you can't assume. Or people will say that they think they can't afford it. They think it costs too much. When the reality is you can't afford not to have life insurance. It's evidenced by the number of GoFundMes that we see all the time, popping up on Facebook. Can we all just pitch in and put money together? And, and it's sadly enough, it happens. It seems that it happens more commonly in our culture.
In our culture,
and not that it doesn't happen in other cultures, but we definitely see a high presence of that, with ours.
Well, I had a conversation with a woman who was from Nigeria, and she contacted me as a client, and she said she wanted to get life insurance. This is the reason she said she wanted to get life insurance. She said because in our culture, it is now more difficult for us to now help out our African friends and colleagues who don't have enough money anymore. Because in their culture, it is ritualistic that if someone passes, that it is a part of your culture to come and lend a hand. But even within that culture, Breanna, they're saying, we don't have it like that anymore. And it is even more difficult for us to now go lend a hand to our African brothers and sisters. So even in the midst of a culture that is used to coming to the aid, even they're saying that's not as easy to do now. So again, to all of our listeners, to all of you, even our Facebook family and friends, listen to me. It is imperative. Do not assume that in the pending doom or something should happen, that everybody is going to flock to your aid and lend you the money necessary to handle your loved one. And even if so, if they handle the burial, what are they going to do about life after?
Right.
Right. It's only going to cover one part.
Right. Exactly. So, and realistically, life insurance can be very inexpensive, very cheap, and we're going to show you that today. We're going to prove it to you, so we can kind of remove the excuses and the myths and all of this other stuff. There's quite a bit that we're going to share with you today. But first, we need to help you determine how much coverage do you need. Now, typically, when I meet with a client and I ask them, have you given any thought to how much coverage, you need or do you want? Most people, quite honestly, don't know how much they need. They don't know the process. What do I need to think about? What should I consider? All of those types of things. So the average response that I get is, well, I think I need about 50,000 or, about 100,000. It's really just a random number because it sounds like a lot of money, But realistically, if your salary is $50,000 a year, and you're asking for a $100,000 policy, and you pass away, how long is that 100,000 suddenly becomes so small, that it's gone in a matter of, short minutes.
I don't understand. It's almost like people are treating their life like getting to the grocery line and getting to the cashier. So you get to the cashier and they're saying, okay, let's see, I've got $120 worth of groceries. Just charge me $120 for the groceries, bag it up, let's go. That's how they're assuming when they come to us. They're just looking at life saying, oh, well, let's see. Looks like, it looks like about $50,000 will pretty much cover my death, my family, all the assets that I have, everything that I've ever possessed. $50,000 is going to cover that.
Right.
You can't be serious.
Right.
And what is funny is when they say that to us, and we say, well, let's do an assessment to determine the value of what you have. Their thinking is, oh, no, I just want to pay this per month. Oh, okay, well, then you have to put all that back in your cart then. All right, give your car back, give your house back.
Right.
Just give all that back because what you are asking is only going to cover enough for you to go through the speed line. You need a little cart with just a little bit of stuff in it.
But that speaks to a larger issue of, financial responsibility and management. That's a whole different category, a whole different subject for a whole nother day.
Absolutely.
So when we come back, we're going to be talking about the cost of a funeral and really going into detail about how do you decide the things that you should be thinking about on how much coverage do I have? Am I underinsured? Am I overinsured? All of those types of things. So we're going to take a quick commercial break and we'll be right back.
I love my two boys. They're my whole world. They're everything to me. But being a single parent at my age was never a thought of mine. My wife, Katie, she was the nicest person anyone could ever meet. We started our life together. We got married. When we started our family, Katie wanted life insurance, but being young and healthy, I didn't think we needed it. It's a good thing Katie got her way on that. Shortly after our second son was born, Katie contracted Ewing sarcoma cancer. No matter what, we were positive, you're gonna make it. A year and a half after our second son was born, cancer took her life.
Katie was adamant about getting life insurance for her family. Some people think that because they're young and healthy, that they don't need life insurance, but they do. Now, Stephen can raise his sons without having to worry about money.
Although nothing can bring Katie back, the life insurance has afforded us to be able to keep the life that we had before she passed.
Mark was a stand-up guy, and he was a great dad. We wanted to protect our family financially, so we got life insurance. It was something I forgot about until Mark got so sick and needed to have a double lung transplant. Because Mark's prognosis was so bad, we were able to use the money from his life insurance policy while he was still alive. I didn't know the life insurance had living benefits. It helped pay our mortgage and the mounting medical costs.
When Mark purchased his life insurance policy, it had two important features. One being the waiver of premium that will pay the premium if you become totally disabled. The other being the living needs benefit rider. Because of Mark's prognosis, we were able to tap into the life insurance policy, and those proceeds were able to help his family carry on.
The lung transplant gave us 3.5 years. We got to make memories. The life insurance helped us while Mark was alive, and it continues to help us today. I can't imagine what my life would be like without it.
And we're back. So we're having a discussion today about life insurance and how much do you really know. And in this first segment, we were just talking about the reasons that people don't have life insurance and things that people do and don't think about and how we kind of live in the moment. And so we want to kind of shift gears a little bit and talk about what are the different ways for you to, things you need to think about in determining how much coverage do you need. And so one of the first things I would say is for those that are homeowners to be thinking about, do you want your mortgage paid off if something were to happen to you or your spouse?
Absolutely. And again, because in the moment when someone passes away, there are so many different emotions that are happening within the individuals. The anxiety level of a person, in particularly the spouse, the anxiety level is so high that the thinking straight becomes very difficult.
Right.
So the last thing that the spouse, the remaining spouse, is thinking about is my home going to be covered? What they're really thinking about is I've just lost my mate. What am I going to do? This person's never coming back home ever again.
Right.
What does that do to our home now? What is that going to do to my personal life?
Absolutely.
Our children and all that comes along with that. So they're not thinking about that. And what they don't know is that there is insurance that can be taken out that it's called mortgage protection.
Right.
Where it will actually cover the mortgage. The person passes, that policy will cover that mortgage.
Right.
And they don't know that that's something that exists. Is very simple and it's very easy to get.
Cost-effective.
And it'll take care of that, and even much more, depending on whatever is left from that mortgage, and how that would work.
Right. Yep. Absolutely. So definitely, that's like top of the list when you're writing down the things and dollar amounts that need to be taken care of. And in some cases, some people decide they don't want to live in a house anymore if their spouse passes away, that they want to sell it because maybe it's too much, especially if the spouse died in the house. But it's still important to think through these things. And then when it comes to your children, is there a plan that you wanted to, be able to have your children go off to college, and you wanted to be able to put money aside from that? A lot of times people assume, they'll be fine because, I'll be around when they go off to college. Again, that's another assumption. We don't know that to be true. And so that being the case, if that's your desire, would you want to leave enough money behind so that that's taken care of and that's not a financial burden? Okay, if something happens to me, I know that my spouse will be able to take care of the kids and be able to take care of college for them in replacement of my income. So speaking of income, that's the other thing, is replacement of income. If you're the breadwinner in your house and you suddenly pass away, what does that do to the family?
Or if they're the main breadwinner,
right?
Because if they could there could be dual supplement.
Absolutely.
But if you are the main breadwinner and you pass, how much has that affected the house? Substantially.
Right.
Because now that major portion of money is gone. How do you replace it?
Right.
Is it replaceable? Will the plan of the house change?
Right.
All of these things are conversations that you would want to have before. You do not want to have those conversations after, because the after conversation is a much more difficult conversation to have.
Absolutely. And there's so much emotions and things going on, when your spouse or your loved one that's closest to you passes away. The last thing you want to have to worry about is the financial piece. I always say a spouse can grieve a whole lot easier if they don't have to worry about the money.
Listen to me.
I am not going to be upset.
You'll grieve a lot better when the beach is the sand is white and the water is blue. You will definitely grieve a lot.
I mean, true enough, obviously no amount of money can replace your spouse, but let's just be real. If I don't know if any spouses are going to be like, I can't believe my husband left me $1 million. What is wrong with him?
I mean,
the nerve of him. What is wrong with him leaving me that kind of money? I mean, really.
So for those of you that are in Facebook and you come across that difficult moment in your life where your spouse leaves you $1 million and you feel that you don't want it, you can send all of your contributions too.
Right?
But I do want to say in that being in this business, one of the hardest things for us is having to deliver the benefit to someone who passed.
Right.
I know you have stories. I've got stories.
Yeah. Give us one.
Of situations where unfortunately individuals did not have life insurance, and unfortunately, I'm sad to say that I've got way more stories of people who didn't have life insurance than did.
Right.
And one of them is a precious young lady that I knew. Unfortunately, she was in a car accident. It was so, you just didn't know it was coming. No one sees it coming.
Right.
In a car accident, and we're thinking that, the accident was minor. She goes to the hospital. We're thinking, all right, it's just going to be a standard recovery, because that's the way that we think in life.
Right.
We never, ever think that our time is coming.
Yeah.
We never think that. And she's in a hospital. Everything is fine. But all of a sudden, her recovery went a whole different direction. And it went a whole different direction, Breanna, and she died.
Wow.
And she was in her early 30s.
Wow.
No children, no nothing. And even the more, because of the theory, I have time.
Right.
When I spoke to her, when we had this conversation, her thinking was, she was transitioning. She was getting ready to get a better job. She wanted to stabilize herself with her new job and then get life insurance. Well, ladies and gentlemen, unfortunately, when she got the job, it was in the same week that she got the job that she had the accident.
Wow.
So that meant her benefits on her job, Breanna, didn't kick in because she just started and she didn't have life insurance.
Wow.
So unfortunately, when she died, ladies and gentlemen, she had nothing.
Wow.
And we had to rally to help the mother to bury her.
Wow.
And unfortunately, and this is the other part that I need you all to understand, that even though death is a very difficult thing, in the perspective of funeral home, cemetery, it's just business.
Yeah.
So
Yeah.
when they didn't have the money, there was no service. They held the body. The cemetery's not, they're not going to give it to you on the arm. They're not going to say, oh, well, we understand. So we're going to dig a hole over here and just put her over here and put her on hold until.
Right.
That's not how that works.
Right.
And I think that the way that we view life, we are viewing life like we view time.
Right.
I just have time. Well, I've got friends. I've got family. They're going to help me. Well, how does a person help you when they're trying to help themselves?
Right. That's right. That's right. Absolutely. Very valid points and very, unfortunate story. But I mean, it's true to life. I've seen, some of the same things happen with some of my clients that, people who became clients after the fact.
Right.
Unfortunately, funerals tend to do that. That's when people start thinking about life insurance. Like, oh man, when someone dies suddenly and in a tragic way, that's the time that people are like, oh, you know what, I need to go ahead and get some life insurance. Can you help me?
And I hate that.
Me?
And we've had that discussion. I hate it. I hate it that it's an emotional purchase. I hate that. I hate that we wait until the emotion of it kicks in, and then we see the sensitivity of it. But in the reality, most of us, especially within our culture, the African American culture, that is when the urgency kicks in.
Yeah. Unfortunately.
Unfortunately.
So let's talk funeral costs, because that's the other thing, of course, that needs to be taken care of first. Can you afford to bury yourself? Right now, the average cost of a funeral ranges between $8,000 to $12,000, and the average cost of a cremation is somewhere between $3,000 and $7,000, and all of that depends on how elaborate you are with
Absolutely.
what you tend to purchase for your loved ones. They have so many new things and features and stuff out now, even with the cremation, with keepsakes and
absolutely.
There's just a lot going on that people do tend to buy that stuff. But at the very least, you need to be able to cover the funeral as well. So even if you couldn't realistically afford a lot of coverage, at the very least, you want to at least get a $10,000 policy and be able to take care of your funeral expenses.
And can I just slide something in there?
Yeah.
While we're thinking about the expense part.
Right.
Ladies and gentlemen, please do not negate the expense that if you are not attending a local church, that you will also have to pay to have the services at the church, pay the minister who is going to be doing the eulogy for the service. See, these are the other things that get missed in the itemized cost of what it's going to take to actually do a funeral. So, these are things that we need to consider.
Yeah, absolutely. And going back to income replacement for a minute. So when you're thinking about your income, if you're the breadwinner or you're a contributor to your house and they depend on your money for income, then you need to be thinking about 7 to 10 times your salary in terms of life
Absolutely, because it's not that year. We're not trying to cover the salary for that year.
Right.
We're trying to cover it for a duration.
Right, exactly. So when you start really breaking it down, there is a lot to think about, and certainly all of these particular areas are important. One of the other things that you want to consider, let me see, we said mortgage, we said funeral, the children, the income replacement, are your debts. If you have certain debts and whatnot that potentially would have to be paid off, you want to leave some money there too, but then there's also legacy. Sometimes people do want to be able to leave money behind just to say they left money behind for their children or their grandchildren.
I hope to Almighty God that we want to leave a legacy.
Yeah, it's important.
We are crippling our children. that if we don't leave them something so that they can progress beyond us, what are we really saying as parents?
Right.
What are we really saying? And what are we saying to our children when we pass and don't leave them something so that they can go beyond where what are we saying to them? Are we really giving them the parental guidance? And I will also say that unfortunately with our parents, my parents, they didn't have it. But I also realized that parenting at that time was viewed differently. There was a different perspective of parenting. And so when we come back, we'll talk more about that, because I think we need to take a look at what life was then versus what life is now. Right.
Yep. And we're also going to talk about the different types of life insurance to make sure you get a full educated understanding of what are the different types and what do you have? Do you have the right kind that's for you, et cetera, et cetera. But we'll be right back.
When I first met Jackie, I noticed in her personality that she was just absolutely bubbling, sure of herself. A person that believed in prayer. She believed that every person was just great.
She was interested in everything we were in. Sports, TV shows, music, anything we liked. She cared a lot about especially her friends, but especially her family and my sister and I.
When her husband passed, he had a small policy, and it wasn't enough to maybe take care of all the needs. And Jackie had some insurance, but then she said to me and said, "Mom, I think I need to get more insurance because I'm not sure what would happen if something would happen to me."
She said, I just want to buy the best insurance that money can buy. She wanted something that would protect her in case she got ill. She used the word, "I want the whole enchilada." I said, fine. We met frequently for lunch, and sometimes we'd meet for breakfast. And our friendship was very, very close.
She first had a cough, and we thought it was just a cough, maybe a cold or what have you, and then we decided to go and get x-rays.
And that's when she broke the news to me and told me that she had cancer and that she would have to take advantage of the disability part of the policy.
She always felt like, well, Mom, this is just another thing that we have to pray about, and she felt that she was going to get better.
I suggested to her that she would go ahead and use the terminal illness policy, which allowed her to receive 75% of the policy. That's when she decided to purchase a home for her daughters, purchase a car for her mother and dad, purchase a car for her other daughter, and she made all her funeral arrangements. She paid for them. She actually, what songs she wanted to be sung at the funeral.
She took some of it for tuition and clothing and getting Ebony settled in school.
She told me, that I'm really sick, and she'd always, just tell me, in the event that something happens to me, you all will be taken care of.
She said, "The day I leave, celebrate my life."
She first told me and said, "Mom, my body is shutting down." Said, "I think I need to maybe get up." When she stood up, I have to get up, and she said, "Mom, I think I'm going to faint." I said, "You better not do that to me." And she said, "Well, then I'll pass out." And she laid her head on my shoulder, and that was it.
She was an advocate of life insurance. Everybody she spoke to, everybody she saw, whether it was church, whether it was friends, that was always in her mind, is that you need life insurance.
Just to know that, that person loves you enough to take action so that when they're not there, that you can take the time to deal with grieving instead of trying to, oh, now what are we going to do? How are we going to pay for this? How is this going to be taken care of?
She wanted Ebony and Shannon to have the best education and have the same lifestyle that she was able to give them after she was gone. And that's why she chose to have insurance to help them along the way. That was her greatest wish.
And we're back. Thanks for hanging with us today. We're talking on the subject of life insurance and how much do you really know?
How much do you really know?
This will be your test today on how knowledgeable you are, and hopefully you'll gain some insightful information today that will help propel you forward in your financial decisions.
Absolutely.
Just as a reminder, we're taking your chats in the Facebook group, and also if you would like to call in with your questions or comments, the number here is 301-429-9247 or 306-7284.
We want to hear from you.
Yes.
We want to hear your questions, because maybe there's some questions that you've been having that have been the reasons why you haven't really decided to get insurance. Well, just give us a call. It's 301-429-9247, 301-306-7284.
So now we're going to talk about the different types of life insurance, because, most commonly people only know about two types, which is typically whole life and term.
No, there's two types. Can I afford it or I can't afford it? That's what they're thinking.
Well, that's true too. That's true too. But if you ask people, really, actually, when I meet with people and I ask them, what type of life insurance do you have? The most common response is, I think it's whole life. I think it's term.
You better than I am, because I ain't going to tell you what they say to me. That I typically get, I have a policy.
Okay.
I have a policy.
Okay.
And some struggle to even know what is the face value of the policy.
Right.
Because the last time they saw the policy was the day they got it.
Right. Well, it speaks volumes to why we do what we do, because we want people to be knowledgeable and educated about what they have, to determine do they have the right thing. Quite often, to your point of how people just kind of tuck it away and don't ever look at it again, gets people in trouble sometimes.
Absolutely.
I met with a lady recently whose mom now needs a policy in her 80s, because the policy that she was placed into, she thought was a permanent policy, and it actually wasn't. And so now in your 80s, after you've paid on it for like over half of your life, now all of a sudden you have to get a new policy at a higher dollar amount per month for less coverage than what you currently have. That's not the way it's supposed to be.
So term life and whole life is not the same.
Absolutely not.
So what's the difference?
So
tell us, what is the difference?
So let's talk term first of all. So term is going to be a policy for a specific period of time. And it's only going to cover you for 10 years, 15 years, 20 years, or 30 years. Those are the typical time periods offered by most insurance companies.
So you telling me if I got a policy and the agent said that this policy was 10 years, after 10 years...
You're done. It's a wrap. Finito. Finished.
That's it.
Yes.
That's it.
That's it. That's all.
It don't have like a rollover.
No. I mean, now some policies are convertible. Some term policies are convertible where you can change them over from a term.
But that's something that has to be done by the individual.
Absolutely.
I'm talking about automatic rollover.
No.
You're like, so we
rollovers.
just like at 10 years and one day, it just click and roll over.
No, the price is just going to go up drastically. What will happen.
Yes.
So you'll see on your policy, it will say, if you have a term policy, it's going to say term life to age 90 or age 95.
Right.
Don't get that confused and think that you're covered all of that time, because what it's saying is your price is guaranteed to stay the same for the duration of the period that you purchased.
Absolutely.
10 years, 15 years. So if your price is $50 and it's 15 years, it's going to be $50 for that 15-year window. But once that 15 years is up, you're going to see it jump drastically from $50 a month to it could be $500 a month. And then the next year it might be $1,500 a month, and it'll keep going up and up and up until you can no longer afford it. Now, some people would say, well, why would I want that type of policy? So keep in mind, every type of policy has a purpose. So maybe a term may or may not be right for you, depending on what your specific situation is. One of the common things that gets people in trouble who only get term policies is not planning their exit strategy. So if you know that you got a 15-year policy, that means in 15 years, you better either have enough money saved that you don't need life insurance.
Absolutely.
Or you better
Absolutely.
be ready to make a transition and a change
Absolutely.
into something else. So many people, I find, get caught off guard as if they didn't know that the term was going to come to an end. But that's not something you should be surprised about.
In some cases, they do, because the average client is only engaged in the conversation at the moment that policy is actually being taken.
Right.
Once the conversation ends, it's out of sight, out of mind.
Right.
We are not going back as clients. And in most cases, unlike us, we follow up with our clients.
Right.
But most agents don't follow up.
Right.
What they do, they secure that policy and they move on.
Right.
And the only time that they may come back is if there is a referral that has brought them back because you may have referred them. But realistically, the agent should be following up with the client at some duration of that policy's tenure to see if in fact we need to make some changes. Ladies and gentlemen, as sure as we are having this discussion, there is one guarantee that is going to happen. Life is going to change.
Right. Right.
If and when life changes, there's some things that you may need to change with your policy.
That's right.
And so that's why the whole life, term life conversation needs to be had.
Right.
We need to
right.
have that conversation.
Yeah, absolutely. So reasons why people would get a term policy. If, like he said earlier, if you have a mortgage and you want to make sure the mortgage is taken care of if you pass away, then a term policy is great for that, because most people finance their mortgage for how
Absolutely.
long? 30 years. And so you can get a 30-year term, and that will make sure that if you pass away at any point in time during that 30-year window, your house is definitely taken care of. Now, one of the other reasons is because it is cheap insurance. So sometimes when you have children at home that are under the age of 18, you need more coverage during that window of time. But maybe as they get older and they're grown, they get out of the house, you have less financial responsibility, you don't need as much coverage later. So therefore, having a term to cover that window of time while you have children in the house is definitely going to be beneficial. And sometimes people can't afford, maybe they need a $500,000 policy, but they can't afford a $500,000 permanent policy, but they definitely need a $500,000 while the kids are in the house. Then it makes it affordable. So a term is good for that when you need large amounts of coverage to cover a specified period of time while you have a higher amount of financial responsibility. I mean, let's face it, folks, once you become an adult, and usually the next things are getting married, buying cars, buying houses, having kids, and all of those things just start adding up and up and up, and before you know it, now you have amassed a great deal of assets and sometimes a lot of debt. And so you want to make sure that all those things are covered. So those are like some of the main reasons why people would get a term. Switching gears to the whole life policy, that one is a guaranteed permanent policy, and typically, more often than not, people are using that type of policy for burial coverage. So if I need to at least take care of the funeral costs, then I'm going to get a $10,000 whole life, or $15,000 whole life, $5,000 if I want to do a cremation, that type of thing, and at least that your burial portion is taken care of. Now, sometimes you can have more than one policy, you can have more than one type of policy. You can have 5 if you want. It's all a matter of what you can afford.
Absolutely.
Is the truth of the matter.
Absolutely.
That's some questions that I've gotten asked before of, can I have more than one policy? Absolutely.
Absolutely
The insurance company is definitely not going to put a limit on how many policies you can have.
There's some things that they're limited in.
Right, but that's certainly not one of them.
That's not one of them. So listen, we want you to call in. If you have questions, we want to hear from you. 301-429-9247. Again, that number is 301-429-9247. Or you can call our other number, 301-306-7284. Again, that number, 301-306-7284.
So one other thing I want to mention about the whole life policies that people need to be aware of, because sometimes they hear about the 2-year waiting period, and they're not sure,
Yes.
does that apply to all whole life policies or just some?
And when you're talking about that, because you struck a nerve right there, I had to jump in. Talk about that, and then talk about the sicknesses.
I'm going to get to that.
Yes. We got to talk about that, because I need everybody. This is what I need you to do as we get ready to go to commercial break. I need everybody to get somebody, share this. Get somebody on this broadcast for this next segment in particularly. Because within our culture, we deal with a lot of individuals with high blood pressure, diabetes, HIV. We need to have that discussion because, ladies and gentlemen, insurance has changed. And where at one point it was not coverage for it, there is now. Even if you are insulin diabetic, come back. We want to have this conversation with you.
Yep, we'll be right back.
And just like that,
I met Teresa 1989 on church. She was a great singer. We spent about a year before we get married.
My mom, she was very caring. She loved to laugh, always laughed till she was like crying practically.
Well, my mom, she expected us to do good in school, really get a lot of good grades.
I met Nicholas and Teresa approximately 10 years ago. Initially, we just wrote Nicholas's life insurance.
I work, I get out of the house every day, driving all the time, being ladders, and ladders and scaffoldings every day. So I decided to just get it for myself.
We look at educating policyholders. We want them to make well-informed decisions. Nicholas's original comment, I go, well, Teresa, she's a stay-at-home mom. Why does she need life insurance? And I said, we have 3 kids. Well, if something happens to Teresa, are you suddenly going to stay home and be a stay-at-home dad and do all the things that Teresa does?
Finally, Irene convinced me to get Teresa's life insurance. The Hispanic people, we don't want to get insurance because we think we're going to leave the money for the wife, for the kids. But I was wrong. That day, I received a call from my brother Pedro. He want to have a barbecue in the house. So we barbecue, we have a good time. So I decided, it's time to go. I was about 100 meters before the green light. So I stepped a little bit, just to pass the green light. The next team, we feel like somebody hit us. And you lose everything. You don't know what's going on. I see Myra and Gabriel screaming, so I help in there to get out of the car. And then I saw Teresa. She wasn't talking. I know she was dead already because she wasn't moving anything.
He broke his neck. He got his hand like really bad.
He lost his income by the fact that he became disabled, and he had to stay at home and be with his kids as well. So the life insurance continued to provide the opportunity to keep a roof over their kids' heads.
To buy insurance policies is the best thing I did in my life.
The life insurance has really helped me go to college and accomplish my goals. My mom's greatest wish would be for us to go to school, have a good job, not be out there wandering in, wrong paths with the wrong people. Just be good people in general, stay united, stay as a family. And I think most importantly, be happy.
She's been watching us. I told her I'll be taking care of my kids the way you want it, and I told her just go by yourself, go rest in peace, and don't worry about the kids. I've been taking care of them.
We're having fun over here. We're having fun on a hot topic of talking about life insurance and, how much do you really know? When we last left before commercial break, we were talking about the different types of life insurance, and I started talking about the term policies and the reasons for having those, and then I shifted over to the whole life policies, and I wanted to talk about the differences between a 2-year wait policy versus first day coverage. So there is a difference. It's not just like one all together, and sometimes people aren't aware of that, especially if you just talk to your friend who ended up with a 2-year policy and they call it a whole life, and then sometimes that leaves people to assume that all whole life policies have a waiting period.
And
so,
they don't, and if I can jump in, they don't know that the reason why they were given that type of policy was because there was a pre-existing condition that the individual had. They had cancer, they had high blood pressure, which typically wouldn't do it for that. But for insulin-based diabetics and things like that. Ladies and gentlemen, we're in a different time. And those who have cancer, you are no longer excluded from this conversation. You now can be covered even if you have cancer. So you may want to call your friends and your family and say, hey, I just heard on the radio show today that even if I have cancer, there's a possibility I can still be covered. And that's a great conversation to have. So, graded policy, because that's what that is.
Right. So you can have first day coverage on a whole life policy, which means you are covered for the full amount from the very beginning. Let's say it's a $10,000 policy. But if it's a 2-year wait policy, that means that for the first 2 years, if that person passes away, the family is only going to receive the money that was paid into the policy plus 10% interest. So, but those policies exist because, again, like he said, for people who are considered higher risk, people who have had cancer or had a heart attack or had a stroke or something major on their health conditions would need those types of policies because at least they can get covered. Now, sometimes people will go off of the commercials they see on TV that's advertising, hey, you get guaranteed coverage and this and that. Those are guaranteed coverage policies, but if you see it say guaranteed coverage, that means there is a waiting period because they can't guarantee you unless you're considered higher risk. They're going to guarantee you for 2 years. They have to ask you certain medical questions. So if there's no medical questions, it's guaranteed to be a 2-year waiting period. So it's important to make sure that you read the fine print before you go sign up for a policy, because sometimes people have gotten into these graded policies or 2-year wait policies who really could have qualified for a first day coverage policy, but because they didn't know any better.
And can I slide something in there? And this goes back to when we were studying for our life licenses. There's a term called concealment. Concealment means to withhold information that you knowingly knew to either give someone a policy or coverage or to withhold coverage or policy. That's illegal. So if an individual is coming to you and saying that, okay, we're guaranteeing you the policy, but they do not tell you that that policy is a graded policy, which means there is a period of 2 years that the policy will kick in, that's concealment. And I'll also say, too, that a lot of the graded policies that even though the full coverage of the policy does not kick in, if something should happen, the policy, some of those policies, they'll get what they put in with interest. So at least you do get something within the 2-year period. So keep that in mind, too, when you're looking at the graded policy. There is a plus even in the 2-year window that you're waiting, that you will still be able to have something in the event of a death.
And then once you're past that 2-year window, then of course you're fully covered.
You're fully covered.
Exactly. So another type of life insurance that not as many people seem to know about is universal life. Now, universal life has multiple categories, so you really can't put it all in the same box. Not all universal life policies are created the same. So it's important to note that one company may offer one type and another company may offer a different type. There's been some horror stories out there of people who have gotten universal life policies and then later they thought it was a permanent policy. They found out it wasn't covering them and they had to pay more and all these types of things. Again, that goes back to the fact that there are different types of universal life policies. So you can have a guaranteed permanent coverage universal life policy that guarantees you coverage to age 100. Some companies guarantee to age 120.
120, yeah.
So, knowledge is power when you use it, and so and a lot of times the universal life policies, the guaranteed ones, are cheaper than the whole life policy.
Yes.
So if you look at a $100,000 whole life policy and compare it against a $100,000 guaranteed universal life policy, the universal life policy will win out every single time. Now, there's also a regular UL, which is what I just talked about, where people have had those and they ended up paying a cheaper price, but they weren't fully covered for the rest of their lives, but they thought they were. That happens too. So if you have a universal life policy and you're not sure whether or not it's guaranteed permanent and you thought it was, it might be, all this other stuff, you need to ask some questions to your customer service center so that you can determine what exactly do you have. There's also the index universal life policy, which is one that's more of a wealth building tool because it earns higher amounts of interest based on stock market performance. So those are great tools, a great policy to be used for people who want to build wealth. You know, people are used to having their 401k, their TSP, 403b, etc.
Yes.
And those are all pre-tax investments. But when you start to diversify and get a little more knowledgeable about the different types of life insurance, you'll discover that with the IUL, that's one avenue to be able to create some non-taxed income to go along with your pre-tax retirement.
Hold it. Did you say non-tax?
As in tax-free.
Okay, ladies and gentlemen.
Tax-free.
Are you looking for that tax vehicle that will exclude you from having to pay Uncle Sam? Give us a call. Integrity Financial Solution, 410-312-5596. We'd love to have that conversation with you.
It's the truth. You know, I mean, so it really just depends. Like I said, life insurance is so much more now than just I pay, I live, I die. It's so much more involved. So the fourth kind, before we run out of time here, is the variable universal life policy, and that's another one that earns based on stock market performance. So again, it just depends on what the goal is of what you want the life insurance to do for you. That will dictate what is the best kind. Some people will say, well, you know, the best kind to get is term, the best kind to get is whole life. The answer to that, ladies and gentlemen, there is not a one size fits all when it comes to life insurance because everybody's situation is different.
Absolutely.
So the best thing that you can do for yourself is to get educated on all of the different types so you can figure out, for me, what is going to work best for me.
Why do we shop for everything else? We go shopping for televisions. You know, Sony, Samsung, Hitachi, you know, RCA. We look at all these different variances of televisions, right? But then when it comes to life and getting coverage for our life, we go, oh, just give me term. I just need a term because I want to pay this amount of money per month because this is it. Why are we shortchanging ourselves that way? Why do we look at all of the other things in life and we shop for that, but we don't look at our life in that same way?
Right.
That's not the way that we should be looking at life.
Well, again, that's why we do what we do because, you know, we just want to educate people and make sure that they do get the proper information so they can make the proper decisions. So like I said, there's multiple layers of that universal life policy. There's the term and the whole life. But here's the bigger thing that a lot of people, if you got your policy 5 or more years ago, it may not be aware of, are the living benefits.
Oh my goodness.
Let me tell you in a nutshell, the living benefits, there is critical illness, chronic illness, and terminal illness now included in several types of life insurance policies. Now, not every insurance company offers those.
That's right.
So I have to say that too. So if you are not familiar with those, let me just kind of help you with that. Critical illness is if a person ever has a heart attack, stroke, kidney failure, organ transplant,
listen to this.
Any of those things, or renal failure, any of those things, the life insurance policy will pay you a lump sum of money
before they
you
die.
Right.
Before you die.
Right.
So that means your insurance policy does more than just cover you when you die.
Right.
If you have living benefits.
Absolutely.
It does more. But you've got to have the conversation.
Right.
Because these are the conversations, especially for us. Because unfortunately, those sicknesses that she just mentioned, unfortunately with us, has become very common.
Right. Yeah, and a lot of people, you know, really just don't think about it. But, you know, a good example of that would be, let's say Betty had a heart attack and she couldn't go back to work for 2 months. She used up all of her vacation and sick leave after the first month. So then she remembered that she had a $100,000 policy. She then applied for the critical illness benefit. Insurance company cut her a check for $25,000. I think you can heal a lot better.
Listen.
If you know that your finances are taken care of while you are off from work trying to get better from having a heart attack.
Or your pain is going to feel a lot better. While you're shopping on the home shopping network with 25,000.
I'm telling you, but that's considered a living benefit. The chronic illness is like a long-term care benefit. That's another area that we'll have to talk about at a different time. But long-term care benefits is something that people don't think about, or they think of it as it happens to old people. You don't have to be old for that to occur. And so with that particular illness, if you get to where you can't do 2 out of 5 daily living activities, dressing yourself, bathing yourself, feeding yourself, all of those types of things, the policy will pay you a monthly payment, a monthly benefit until the policy runs out. So you'll continue to receive money as a living benefit from your life insurance policy. Then there's terminal illness. Terminal illness is if the doctor has determined that you have cancer or some type of terminal illness, which most companies will say if it's within a 12 to 24 month period, the policy will pay you out 75% of your policy. So again, in a $100,000 policy situation,
that's $75,000.
$75,000 that's coming to you. A lot of times, cancer seems to be a common thing now, but people aren't thinking about, oh man, I could go to my life insurance policy and get some money out of this if the doctor has said that, it's a terminal type of situation. So it's important to know all of these different things. I got to wrap up, but I want to just leave you with a couple of quotes really quick because I just want to give you a general idea to really keep the excuses out of the way for when people say, oh, well, I'll just wait until I take care of this or that before I decide to get life insurance. On your young adult, if you have a young adult child, well, okay, child, but young adult that's, in their 20s, they're between 18 and 23 years old. You can cover them at $25,000 on a permanent policy guaranteed for around $10 a month, okay? All right, $10 a month. Look, I brought my cups.
That's your coffee.
Coffee.
This is your coffee.
Coffee. This is your $5
This is your
$5
$5 twice going there. This is your coffee. You can cover your child
2 cups of coffee
for 2 cups of coffee
a month.
Even in a plastic cup.
Right. As little as $10 a month, and you've covered your young adult child. So, really, there's no excuse. Even your children, your younger children, can have their own policy for as little as $10 a month or less. Again, it depends on the amount of coverage. You could do it for $5 a month. But the bottom line is, you really just, there's no excuse to not be able to cover your family. Even for an adult, let's say you're a male and you're age 45 male that's in pretty good health, then at $500,000, it's $37.40 a month.
$37.
Really. Yes.
Ladies and gentlemen, it's time for you to make the move. It's time for you to make the move.
Absolutely. I got to wrap it up. I got to go.
We got to go.
Ladies and gentlemen, please follow me on social media at I am Breanna Colón. You can subscribe to my YouTube. If you have questions about your policy, please call us on our office line at 410-312-5596. We can help people all across the country. Doesn't matter where you are. Or 1-800 I can't think of the number, so 410-312-5596. Until next week, we love you guys. Bye-bye.
Take care, everybody.